Ken, why don't I pass it to you, and you
Mm-hmm.
can talk to us about what is psychophysiology.
All right. So first I'm going to say that I'm not going to be reading the slides. I'm going to be talking about other points because you guys are going to get the slides so you can read them, and that'll be additional information to what I'll present this evening. So what is psychophysiology? Another word for psychophysiology is simply self-awareness. Psychophysiology is the study of yourself. It's learning to understand how you respond in certain situations. This allows us to make assessments of ourselves and see whether our actions are congruent to our goals. Now, when we have the ability to assess, we can now adjust and change our behavior through the process of self-regulation. So there's a couple of steps in that process. First is self-awareness. Then the second step is a semi-step, it's actually self-acceptance. And then you move to self-regulation. So once you're aware of how you're responding in a certain situation, say for instance in a certain type of a trading environment, there is that semi-step where there's actually an acceptance that you have actually created the result that you just did. There's an acceptance that your action, your response, or your reaction has actually created the financial result. And once there's that self-acceptance, then we utilize self-regulation to be able to augment the decision-making process and to change the action into something which is more congruent to the goal that you actually want. Let's see if this next slide will come. Okay, so the relationship between psychophysiology and trading. Simply put, using psychophysiology, we are able to gauge with very clear, specific numbers how you are responding to the markets, how you're responding to the daily opportunities and threats presented in the markets. We can clearly assess whether your actions are congruent with your trading goals. With psychophysiology, we can assist in the difficult process of changing your behaviors through the use of self-regulation techniques, so that you can actually start to create consistent actions which are more in line with your trading goals. So that brings us to the very interesting point of quantifying trading. So psychophysiology allows us the opportunity to quantify our response to the markets. And this we can do in two ways. You can do it through a qualitative assessment, or you can do it through a quantitative assessment. And we went down the track of the qualitative assessment, but and an example of a qualitative assessment is rating yourself from 1 to 5. So today I feel anything between 1 and 5. And what we found in our own research and in the research of others is that your qualitative assessment of yourself is subjective and changes day in, day out. I can be a 4 out of 5 today. I can also have been a 4 out of 5 yesterday, and I could have made it yesterday, and I could have made a profit today. And so, because we saw this vulnerability of using qualitative assessments, we then moved into the realm of quantitative assessments, which is the utilization of biofeedback and neurofeedback equipment. So we all know that we can't make the market conform to our desires. I think maybe all of us have tried to persuade or to plead with the market for the price to go in the direction that we wanted. And for me personally, every time I actually tried that, I failed miserably and created a loss. So knowing that we need to conform to the market, we need to make sure that our actions are congruent with price movement. And when we use the psychophysiological equipment and we record our own physical data in response to the markets, we actually pair the data with price. So for it, we have the capacity to record 2,500 bits of data for every second. When you compare that to a tick, you're getting something like 1,000 bits of data per tick in a fast-moving market. So we can very closely correlate how we're responding to price. So that's the way that we've quantified trading and quantified it in terms of our response to the market. The obvious question, and a very simple question that perhaps most, if not all of you, know what the answer is, and what is peak performance? For us, peak performance is our ability to respond, to act optimally in our environment to produce the best result possible. That's simply what peak performance is. You can be a peak performing trader, athlete, secretary. It's simply to choose the most optimal response at that point in time and to execute it as best as you possibly can, or to get the optimal result. So we all have experienced the phenomena of a peak state, that is being in the flow, whether when we're trading or in some other endeavor like sport. But the trick is to experience it on a daily basis and to experience it on demand. The purpose is to build our peak performance muscle, the ability to enter into that state. And I had the pleasure of, for 4 months of last year, from June till October, working with an Olympic coach. And he was telling me of some of the athletes that he had trained that within 2 breaths, they can get themselves to be firing in a peak state. So a lot of these Olympic programs and professional football teams around the world will train their athletes that within 1, 2, or 3 breaths, when they're hooked up on EEG, on this neurofeedback or on biofeedback, within 2 or 3 breaths, these people can start to produce the psychophysiological responses of being in a peak state. So in training, that's important, because when you get in the competitive arena and you are facing certain stresses, or it's time to make that entry or take that exit, you can center yourself, you can take 2 breaths. The equipment tells you that you're in a peak state, and then you can make the most appropriate action that comes to mind at that point in time. So that's a little bit of the way that we look at peak performance, and it's building up the states of peak performance in each one of our traders, which is what's important. Knowing when you're in the zone, and also what's very important is knowing when you're not in the zone and trading accordingly. If you're not in the zone, don't place a trade. If you're in the zone, place the trade and bet big. And unfortunately, when we're trading, we don't know and we can't discern between whether we are moving into a state of peak performance or whether we're moving out. Are we in? Are we out? Could we be in? And this level of uncertainty creates doubt, creates second guessing, and all of a sudden you start to spiral downwards. But with the software that we've developed and utilizing biofeedback and neurofeedback equipment, we can clearly quantify whether you've moved into peak state or whether you've moved out. And that's the way we can start to mitigate our losses and propagate our profitable trades. Next is the relationship between peak performance and psychophysiology, and I touched on it a little bit in the last slide. But peak performance is a type of psychophysiological state. Just as sadness, depression, and fear, they're all psychophysiological states. And we can measure peak performance just as easily as we can measure when someone is fearful. When you're fearful, your body reflects very specific symptoms, and we can gauge the fear and the intensity of the fear by measuring the change in your peripheral temperature, your skin conductance, your breath rate, your heart rate, the rate of oxygenation of your blood. And using EEG, we can see what part of the brain is firing, at what frequency, and in what pattern. And much the same way, we can tell when you're in a state of peak performance using all the same sensors that I just mentioned, and using EEG, where, EEG, for instance, the term is to be in the state of peak alpha, and peak alpha is simply a frequency band between 8 and 13 hertz. We can clearly measure when you're in a peak state and when you're not. And we can measure similar. It's the same phenomena as a bell curve. We can measure when you're moving in, and we can measure when you're moving out. And peak performers can do a number of things. Number one, they can move into these bell curves of peak performance on demand. The other thing that they can do is that they can get to the climax faster, and they can even hold the peak state for longer before they start to come out of the bell curve peak performance.
So before we jump to the next slide, why don't we just have a little bit of fun now? We actually have a few polls set up for tonight's presentation. So I'm going to launch a poll now, and I'd love to just gauge the feel of the audience here. And what we'll do is we'll compile the results from these polls today, and we'll share it with the video in the slides. But let's just take a few moments. Why don't you take a look at the question? Given what you've learned today so far, how important have you found that your psychophysiology is to your performance? So I'd love to just capture your votes here. So let's just give it about 5 seconds. And this is kind of a loaded question, right? It's number one, you have to kind of be aware of when you're in that flow state or that kind of peak state. And number two, again, is what do you think is the importance of it? So thank you so much, folks who voted so far. Give it a couple more seconds. All right, thank you. I'm closing the poll. All right, Ken, back to you.
All right, so where were we at? So trading as a performance-based activity, my experience and from our research, trading has nothing to do with luck. Trading has nothing to do with privilege. It's got nothing to do with education. And trading actually has nothing to do with your account size. Excellent trading makes money and poor trading makes losses. People have made billion-dollar losses, as we all know, in the institutions, and people have taken small accounts and grown them. So it's not really, a lot of people complain that they don't have enough money, but that's actually usually not true. The performance, trading as a performance-based activity is shown to us in the fact that traders don't get paid based on attendance. We purely get paid based on results. We get paid to see opportunity and to act accordingly, to see threat and to act accordingly as well. And trading is a pure performance sport simply because it's perfectly binary. You can choose to win or lose, go long or go short, place a trade or don't place a trade, enter the market or not, exit the market or not. Our results are instantaneously given back to us. And every decision that we make is an instant feedback from price. And that's how quick our performance feedback is given back to us. We make a decision and we take an action, or we don't take an action and price tells us instantly whether we're right or wrong. The success of our decisions is immediately quantified and given back to us in the form of profit or loss. Personally, I don't know of any profession in the world where you get that form of instantaneous feedback day in, day out. And I don't know of many professions where to not perform well actually causes a decrease in your financial wealth. So that's, you can even perform well, but if you don't perform well enough, you can still actually lose money for the day. So you can work for 8 hours or for 6 hours during the day, actually have less money in your account than when you walked into work. So that sort of leads us into the rigors of a performance-based activity. And I'm just going to flow on from what I just finished and say that most jobs and professions in the world get paid for attendance. Most people get paid a base salary regardless of how they perform. Employment law makes it difficult to fire someone based on performance alone. Most employees are required to turn up to work and do their best, and most people get paid even if they don't turn up to work through sick pay and maternity leave and holiday pay. But as retail traders, we get paid solely on performance. If you don't trade, if you don't attend to the markets, you don't get paid. If you attend and perform well, you still may lose money. But on the flip side, if you perform exceptionally well, consistently, the level of freedom and financial return you can achieve is incomparable to any other profession in the world. And I think this is the lure and the challenge that trading presents each one of us. Trading simply challenges us to be at our best consistently. You can't take it easy and trade in the markets if you're going to actually trade with live money. If you need to rest and recuperate, then it's best actually not to put any money on the table in those down days. So there's an obvious question that we each have to ask ourselves, and it's actually good to even ask it on a daily basis before and after trading, is simply to ask, are you a peak performer? And when I ask myself this question, I split it up into 3 sub-questions. And the first is, do you perform consistently to the best of your ability every day? The second question is, do you think, given the right support, you could perform at a peak state? And usually that question gets me to ask myself, what is it that I need? How do I need to support myself so that tomorrow I can trade better than I did today? And a question that I had to ask myself a number of times through the early periods of my trading was, would you like to perform at a peak state consistently day in, day out? Because it actually gets very, very difficult to push yourself to perform at your best day in, day out. And it's not for everybody. There's no magic indicator that's going to do the work for you. There's no black box system that you can press, go to sleep, and the money's going to appear in your account tomorrow morning. That sort of stuff is fantasy land. We can, like all other peak performing athletes, we can provide the supporting structure which allows us to perform our best and achieve the results that we aim to achieve. And we still have to do the hard work. You still have to do all of those things that everybody else in the world does, regardless of what code they're in, to perform at a world-class level. And so we get into what does everybody else do that's a peak performer? And should we perhaps be copying what other peak performers, consistent peak performers do? And our research and all of the testing that we've done has proven that to be true. And we need to ask ourselves, how do teams and clubs, academies and Olympic associations produce consistent results in their athletes, game after game and year after year? Given that these results are being consistently replicated, it shows us that it's not up to luck or chance. There are certain strategies that these organizations put into place to consistently churn consistent peak performing athletes. And so the other question which always amazes me is, how do certain athletes perform at their absolute best under the scrutiny of millions of people, like for instance at the Olympic Games? You have people like Wayne Gretzky, Peyton Manning, Roger Federer, Cristiano Ronaldo. All these guys consistently, day in, day out, month in, month out, year in, year out, are performing at the highest level in the world. And the literature that sits behind all these successes is that there is a systematic approach to what these people do. And they have a process of training, performing, resting and recuperating, and evaluating the performance. And I found it interesting the other night, Peyton Manning, in his retirement speech, said that no one on the field prepared more than he did. So after 18 years of extraordinary success, every single day he still prepares to play at his best. And I've found that with a lot of traders that I've spoken to, there's a lack of preparation. There's even a sense of entitlement. Well, I this, or I work for such and such. And so the hard work of the preparation day in, day out gets thrown out the window. But what goes with it is actually the results. And so then we get into this whole routine of blaming the markets or blaming some external factor, if only this and if only that, where in reality it all comes down to our preparation, the degree to which we prepared, the degree to which we consistently prepare, and that comes down to how much do we value preparation. The other thing that we learned through this process was that these consistent peak performers train every day. They spend more time training per week than they do competing. And in our peak performance sport, we actually compete much more than we actually train. A professional soccer player like Cristiano Ronaldo will have 6 to 10 training sessions per week and compete once or twice only. And I learned this from the Olympic coach when he was telling me, he goes, maybe you should think about not trading 5 days a week. He goes, it's actually ridiculous that someone's required to take on the level of risk and responsibility that you do, and you're supposed to sit at a screen for 8 hours per day, 5 days a week. He goes, there's no chance in the world that your body can recuperate under those forms of stresses that the next day you can perform at your best. He goes, it's physically impossible. So we actually broke up my trading routine into trading, because I trade the evening sessions. I trade midway through the Asian session and the lead up to the commencement of the European session. And so I start on Sunday night. And he said, how about trading Sunday, possibly missing out on Monday night? So that's trading Monday, miss out Tuesday, miss Wednesday, come back and finish the week with Thursday and Friday, just so that you recoup enough. We ended up doing a balance where I was trading the trading session Monday, Tuesday. I would take Wednesday off, and then I would do Thursday and Friday. And we found that on Friday, my performance was not optimal as well. So I strongly believe that there's a need for a shift in the way that we understand what we do, and to start to realize that given the mental stresses that we're under and physiological stresses, we actually need to incorporate, just like any peak performer, we need to incorporate rest and recuperation. And this very, very vital thing of evaluation, and not evaluation in the terms of profit or loss. Am I more successful going long or short? What's my risk reward? Not that. That's important. But what needs to be integrated is my psychophysiology. Am I at a peak state today? On a level of 0 to 10 in terms of peak state, where am I today in comparison to yesterday? And then start to do those calculations in order to consistently creep up and be pushing the boundary of what you're performing day in, day out, so that you're consistently growing as a trader, increasing your account sizes, increasing the amount of markets that you can handle. So that brings us into the stress of trading. And simply because it's a peak performance sport, and simply because we either win or lose, we are under greater stress than most professional athletes. A professional athlete, even if he loses a game, will still get his salary, and his bank account will actually increase. In trading, as we all know, if you don't perform, you actually end up having less money than when you started with. And that in itself is a psychophysiological threat, and that it puts you in the perfect environment to be able to move into a limbic response or a sympathetic response. So you're already, before you've even sat down at your computer, the thought of the potential loss that you could incur in the next couple of hours is enough to actually increase your psychophysiology and your biology into actually a sympathetic response. So you're actually geared to a fight or flight response. And as we'll see in the next slide, the last thing that you want is to be in a fight or flight response when attending to the markets. So, as I said, it's the perfect condition for a flight response. And what happens in this fight or flight response is when you're under threat, the first thing that starts to happen is that you start to go into, prior to being full-blown limbic, is that you actually start to have what's called vasoconstriction, and your blood vessels start to tighten and start to push the blood closer to your internal organs. And this is further exacerbated with the release of hormones such as adrenaline. So the problem with this is that there's less blood oxygen nutrients that actually go to your eyes, ears, sense of touch, taste, smell, and you have actually less blood going to executive functioning of the brain, which means biologically you're absolutely incapable of making a good decision anymore, because your body is entirely geared to physical movement to threat. But we don't do a physical job. Our entire profession is just based on using our brain. And so when you've taken your frontal lobe offline because you've started to have a sympathetic response, you're incapable of making a good decision. And the question to ask is, how often do we make decisions when we're under threat? How do you know if you're under a threat? How do you know if you've actually passed the point of no return, where your blood supply has decreased so much that you make a decision, or a good decision? And we measure that with our psychophysiological equipment. We can actually see you start to move into, up that bell curve again, move into a sympathetic response and actually start to become limbic, which is a very, very primitive response of fight or flight. So if we take that now a little bit further and we talk about what is the requisite for successful trading, we know that trading is a purely mental sport, and we need to maintain our executive functioning. Our frontal lobe needs to be engaged, and it needs to be firing in peak alpha, or in as close to peak alpha as is possible. We need to maintain that our cardiovascular system is in vasodilation and not in vasoconstriction, because this allows us to maintain a parasympathetic disposition and a parasympathetic response. As traders, we need to maintain a heightened state of alertness, sometimes for long periods of time, so that we can act responsibly to capture opportunities and move away from threat. And you don't want to move away from threat in a sympathetic manner, because all that does is it elevates your response. So instead of seeing a threat and exiting a position and noticing an opportunity and shorting, if you're sympathetically inclined, you might just exit the position and be too afraid to enter into the market again. So when we start to regulate and notice where we are, we can increase the threshold of how long can you maintain a parasympathetic state even under very difficult conditions, because it's all about conditioning. For certain people, they can move into a fight-flight response very, very quickly, and that's not a judgment as much as it is an assessment. And so we can take people who have an almost traumatic experience towards the markets, and we can start to, using biofeedback, we can actually start to decrease their sympathetic response towards the markets. We can start to decrease people's risk aversion. We can start to decrease people's aversion, for instance, to going short, or their aversion to going long. And this is all possible because of the amount of research that's being done on, for instance, cognitive load. In addition to these things that are written on the screen now, there's another aspect, which is actually cognitive load. It's how much data can you actually handle at one point in time before you start to get overwhelmed and you actually start to get into a limbic response. In addition, one of the points there on the slide that you can see is actually processing speed. How quickly can you process speeds, maintain a parasympathetic condition, parasympathetic response, and be able to action the appropriate response to the market demand. So, looking for the next slide. There we go. All right, so we come to what is NeuroTrader. And I hope that I haven't tried to load in too much information in such a short period of time. And NeuroTrader is a Windows-based application which pulls in the data from our wireless biofeedback equipment. And it has a systematic process of assessing you as a trader in terms of your psychophysiology. So it'll continue every single day. It'll do a baseline reading. In addition to the assessment that it does, it'll also make an assessment on your cognitive load and on your processing speed. Further to that, there are specific training sessions. They're called drills and routines, and they're to improve your cognitive load. They're to improve your processing speed. They're created to improve your perceptual decision making, not in terms of chart patterns, but it's in terms of psychophysiological response. It's to be able to see and respond more clearly in a more regulated manner without being flustered, without being overwhelmed, without any anxiety, or to minimize the amount of anxiety that we're affected with whilst we're conducting the trading process. So that's the training part. After that, NeuroTrader also monitors you whilst you are trading. So as you're making decisions in the market, as the market's moving up, moving down, as it gaps up, gaps down, we are recording your psychophysiology all the time. The last part of NeuroTrader is the reporting side of NeuroTrader. And that's when we put this all together into the evaluation and the reporting side, what it actually gives us is a unique psychophysiological profile for each trader. And we take that psychophysiological profile, and every single day with the baseline recordings, with the training, and with the live trading or / demo trading, we start to notice strengths and weaknesses. And we start to use the biofeedback equipment to decrease the weaknesses, to continue to build on the strengths, and start to create a very regulated, peak-performing trader whose cognitive load is commensurate with the amount of assets that he trades, and whose processing speed is also congruent with the type of asset classes that he trades as well. If your processing speed is low, it's very, very difficult to trade oil futures, for instance. If your processing speed is very, very fast, it's maybe not a good idea to be focusing on a slower moving security, simply because of the fact that it's not a challenge. And that in itself breeds problems and losses. So that's what we do. That's what NeuroTrader is. It's the client side of a client server side solution.
Let's pause for a second. Let's do another poll here for the audience. So I'll pull up another poll now. This will give us a chance to take a bit of a breather and to basically just process a lot of this stuff. But can you see, here's the next question, can you see how tracking your psychophysiology could positively impact your trading? This is a layup question. It's a binary answer, yes or no, as we were talking about before. So give it a few more moments for some more votes here. And we can shut it down. Thank you so much again for voting. Let's move on to the next topic.